Hey everyone, thanks for joining us. We'll wait a little bit just to get some people in the room and watching. Okay, so we'll just wait a little bit longer, maybe like another minute.
Yep.
All right. I guess I'll get us started. So, hey everyone. Normally, we're coming to you from a pre-recorded session, but today we decided to do a live stream. Coinbase announced today that it was acquiring Deribit in the biggest M&A deal in crypto history. So we felt that deserved some up-to-the-minute coverage. So thank you so much for joining us. So I'll do my normal podcast intro and then we'll get into it with Owen. Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Today's guest is Owen Lau, Executive Director and Senior Analyst at Oppenheimer. Welcome, Owen.
Thanks a lot. Thank you for having me.
So this is the first Unchained live stream we've done in a while, as I mentioned. But this deal between Coinbase and Deribit is just the biggest deal we've ever seen in crypto history. And you've been covering Coinbase for a while. So what was your reaction upon hearing this news?
Yeah, I think maybe three things come up when I heard about this news in the morning. So number one, obviously, you just mentioned this is the largest deal, M&A deal in the crypto industry. And I think I think this is just the beginning of a wave of crypto M&A and IPO coming up. The second is this is if you look at the structure of the deal, so this is a large deal, but if you look at the structure of the deal, Coinbase used about $700 million in cash and used $2.2 billion in stock. So I remember during the last crypto winter, a lot of people kind of like Coinbase was kind of ridiculed by some critics on being a public company. Now I felt like Coinbase finally reaping the benefits of being a public company because they only spend a tiny amount of the cash, use a lot of stock, and make a very large acquisition. This is a very important and positive kind of like setup for Coinbase. We can get into more detail later on if you're interested, because this is quite technical. The third one is about Deribit itself. It's one of the largest, or maybe even the largest, crypto option trading platform in the world. I think the number I got was they have about 85% market shares in crypto option trading. So that complement with Coinbase spot and also futures offerings into international exchange. So with all three under the same umbrella, it actually provides capital efficient way for traders to trade crypto. So I mean, I know this is quite technical, but the reason I bring this up is because this is an important deal for Coinbase to expand internationally to challenge some of the largest players outside of the US.
Oh, okay. Yeah. That makes a lot of sense. So we'll talk a little bit more about that in a moment. But I did also want to ask, because I'm sure you're aware that before there were a number of companies that were rumored to be trying to buy Deribit. Kraken was one, Robinhood was another. Why was it in such high demand?
I think number one, I just mentioned because they are the dominant player in the crypto option trading. So again, like number 85% market shares, this is highly respectable number. And the second point, I don't think they get enough credit. Is option is actually way more recurring than spot and futures trading. Not many people realize that if you are in the market structure space, you may notice that exchange like CBOE actually did very well in the first quarter because they focus a lot on the option trading. So from that perspective, you can tell it not just diversify away Coinbase, core trading from spot and also futures. It also make their revenue stream even more stable. It's not obvious, but that's one of the reasons why Deribit is kind of like in high demand.
And talk to me a little bit more about the size of the crypto derivatives market and how much bigger you think it can grow.
It's a huge number. So if I look at the traditional market, I mean, by the way, number one is still growing. And if you look at traditional market as an example, the derivative market can be 10x of the spot market. So let's say, that like the spot, like the market cap of like the total crypto companies is, let's say, $3 trillion. And if the trading volume is, let's say, $30 trillion, it could be like 10x higher than that and more than that. If you look at the crypto space right now, I think 70% of the trading volume actually is in the derivative space, not in the spot space. So again, this market is way bigger than the spot market, maybe 10x in magnitude. At the same time, the crypto business is also growing and getting into like TradFi space, and there's a TradFi crypto convergence that can even expand the TAM.
And I would imagine for an exchange, there's an appealing aspect in it sort of like remove some kind of custody type headaches that are more, of a big concern at a spot exchange.
Yeah, exactly. Like custody, it's a big benefit for crypto because it's being digital. So it's easier for the traders to put their assets into a custody, or maybe you can even have self custody as well. So there are many ways, many offerings out there already to take care of the custody part. In again, like in traditional trading, don't even think about you can take your shares and put it under your bed. You have to use like the third party vendors to handle that. But in crypto, it's way easier.
And so, as you mentioned, this is already a big part of the market in crypto, but we would expect that it would grow, quite a bit larger. How do you think that will play out over the next several years? Like, how do you think that growth will happen, and what will that part of the market look like in a few years?
Yeah, so a couple of observations. Number one, I think it may even encourage more private crypto companies to go public because when they look at Coinbase, right, very large, they only spend $700 million in cash to make a $2.9 billion acquisition. Like, think about that. You cannot do that by being a private company. Like, think about it. So if you're private, then you think about how can I leverage my brand? How can I leverage my currency? Going public, it's painful. Like, believe me, I know Coinbase has gone through a very painful process of being a public company. People kind of like laugh at them, and then they're being tortured by analysts like me, being like they have to like answer my questions on a quarterly basis, and they have to spend extra money, right, on compliance, and also on cost, and also on whatever control. So it's a painful process to be a public company, but I think the wave is coming. I think more private companies see the benefit, and they will go public. The second one is M&A. I mean, we have seen like Kraken and also Ripple just, I think it's buying Hidden Road, and now you see Coinbase. So I think M&A is coming slowly. The third trend, it's a little bit unfortunately, but I think it will become a reality. It's the bigger will become bigger, and the smaller would become more challenging to survive. So at the end, they either being bought by a larger company or they will disappear slowly. So I think there's a bifurcation trend going on, and it's getting more competitive going forward. By the way, the fourth trend is the TradFi company. I haven't even mentioned the TradFi companies is coming into this space. So what that means is increased competition, and the smaller companies need to get the scale. So to me, the scale is the name of the game going forward.
Well, talking about competition, CME has a pretty robust crypto derivatives business, but it just focuses on a couple of tokens and they don't do perpetual swaps. So, what do you think this means for the future of this trading instrument in the US?
Yeah. So first of all, I think CME will continue to expand into other tokens. So I think they have XRP. I think they are trying to do it. No, I mean, I think they have they have the core Bitcoin and Ethereum. They got into Solana, and to me, my impression is they will further go down the path and launch more like different tokens. So that's one observation. The other one is, again, they will also go international. So it will only increase competition. I mean, I felt like CME is just one example. You heard about, I think, Charles Schwab and even Morgan Stanley. They try to get into this space as well. So I would say competition will increase. Again, it just makes the smaller companies harder to operate. So that's why the M&A trend makes sense to me. But it doesn't mean that the fee would go down to zero, or that there will only be like one or two companies remaining. I still think the market is large enough that there will be multiple winners in this space. But I think now is the moment that they want to capture the momentum, they want to capture the scale so that they can kind of like become bigger down the road. So competition, but it's not new. I just want to go back to like think about the last crypto winter. There were still many competitions, but at the end of the day, if you are kind of a good actors, if you are compliant, if you are innovative, I think you can still survive.
Well, so speaking about exchanges in crypto that may not survive, I saw that Raoul Pal tweeted, not only is the Coinbase purchase of Deribit a great opportunity for them, it also dramatically removes the left tail risk of a smaller exchange having 80+% of the options market, where leverage can cause an issue in a black swan event. I just wanted you to elaborate
Yeah.
on his comments there.
Yeah, I think that's a good point. My interpretation is if you are being a small exchange, um, your focus you may only have like one or two products. So what that means is in a good time, you may be fine. But in a bad time, if you are just have one or two products, it may be more difficult for you to survive through the next cycle, right? So we all believe that, or have a kind of like agree that the last crypto winter it's not the last crypto winter. So there will be more and more other cycles coming. So again, go back to the point I tried to make earlier. The scale is better. If you have more diversified products, if you have a more diversified revenue stream, you try to put yourself into a kind of a bigger umbrella under one roof. I do feel like you can become a all-weather company and survive through the next down cycle. So I think the point is well taken. Being part of a larger platform could be the way to go. I mean, if I look at the traditional exchange, in the past, I want to say 20 years ago, there were like 20, 30 different exchanges. Now it comes down to like four largest. So after 20 years, from maybe 40 to four. So I do believe, in some sense, the crypto exchange or crypto markets could go through the similar kind of cycle or evolution.
All right. So in a moment, we're going to talk about what this means for Coinbase more in depth. We're going to talk about the fact that they're reporting earnings later today.
Yeah.
We're going to talk about more M&A activity going on in crypto, and just talk more generally about the future of this market. But first, we're going to take a quick word from our sponsors.
Picture this. The crypto market just got wrecked by billions in liquidations. You need to figure out what happened and what's next. But where do you even start? Meet Focal by Falcon X, your AI-powered crypto analyst. It's like having a legion of experts at your fingertips, ready to break down market-moving events, chart DeFi protocol TVL, or explain why Solana mindshare is rising. Get clarity in a world of noise with Focal. Learn more at askfocal.com. BitKey is the only Bitcoin wallet on Time Magazine's Best Inventions list of 2024. Built by the team behind Square and Cash App, BitKey is a 2 of 3 multi-signature wallet and the first hardware wallet with an innovative recovery suite that eliminates the need for seed phrases in self-custody. Their new inheritance feature means BitKey's not just the easiest way to self-custody your Bitcoin, It's the easiest way to ensure it ends up in the hands of loved ones when it's time for it to leave yours. Learn more at bitkey.world. bitkey.world. Use code UNCHAINED for 20% off. Mantle is driving the next phase of on-chain finance by supporting ecosystem products such as the Mantle Index 4 or MI4 fund and Mantle Banking. Mantle Banking is an all-in-one fiat and crypto account that simplifies how users spend, save, and invest. And MI4 is a tokenized index fund that offers institutional-grade exposure to top crypto assets with built-in yield strategies. Together, they address long-standing frictions in financial access while unlocking a future shaped by composability, efficiency, and real-world utility. Follow x.com/mantle_official.
All right, so I'm back to my conversation with Owen. So at the very beginning of the conversation, you kind of referenced what a big deal this was for Coinbase and said we could talk about it more in a bit. So here's your opportunity.
Yeah, so again, go back to the structure of the deal. I think it's worth mentioning because $700 million in cash and $2.2 billion in stock. If you look at the balance sheet, I mean, now I going into like quite detailed and technical, like there, just bear with me. Coinbase had about $8.5 billion in cash on the balance sheet. So what that means is after these $700 million in cash, they still have about $7.8 billion in cash on the balance sheet. And obviously they used tons of stock and 11 million shares in common equity. But what that means is they can still use the cash plus stock combination to make another big acquisitions if they find any other opportunity. Why this is important? Because if you think about many, I don't want to name any other competitors. If you think about like some smaller private companies, if they spend $1 billion and $2 billion on one acquisition, they have to make sure this is the right acquisition. Think about it, it can be wrong. If it goes wrong, then it probably use up their whole kind of like dry powder on their balance sheet. So it just makes the other private companies' job much harder. I'm not saying Coinbase, this deal is a bad deal, but what I'm trying to say, hypothetically speaking, even though if it is a bad deal, I don't think so, but just say if this is a bad deal, they still have $7.8 billion on the balance sheet. Plus, they still have a lot of stock they can use. I mean, of course, like if you make a bad deal, then people will be skeptical about next time you use stock as a currency. So the point I try to make is they just have a lot of dry powder going forward to take advantage of any additional consolidation or expansion strategy. They are even better right now from a P&L standpoint. Their revenue stream may be even more recurring going through the next cycle. So the point I try to make here is they have like a very strong balance sheet even after this deal. That makes them like put them into a very like unique position to take advantage of the next opportunity.
Yeah, and I remember that the recurring revenue piece is something that they've been working on. So yeah, this definitely helps them in that regard. So how do you think this acquisition rounds out Coinbase's business overall? Like, how do you think they have been doing recently?
How they have been doing recently. So again, go back to the offering. So go back to what Coinbase has. Coinbase is very strong in the US, right? So they have spot trading. They also have derivative trading internationally. They just expanded actually last year. They have spot. They just launched, I think, perpetual futures, but they don't have a strong option practice. So these Deribit acquisition can actually help their option kind of presence. So now they have spot, options, and futures. So why is it important? It is because it provides a very strong, like capital efficient venue for traders to come. So what that means is if I am a trader kind of outside of the US, if I want to trade options, I have to go to Deribit. But if I want to trade spot, if I like Binance, I go to Binance, or I go to Coinbase, or I go to like some other platform. So now what Coinbase offering is You can come to me. I offer spot, I offer options, I offer futures. So that create a very like a deeper liquidity pool that can attract traders to come to Coinbase along. That I can trade spot, I can use options to hedge my spot position within Coinbase. I can also use my future position to leverage or to hedge my spot position. So again, this is quite technical, but what that means is it actually reduces the capital requirement for the trader. That is the incentive to move trader from other platform to Coinbase platform. Again, I know this is quite technical. Not many people understand what's going on, but the capital requirement thing is real. So it can attract traders to come to a platform to trade multiple products.
Yeah, that makes sense, both from a liquidity perspective and even just like a convenience perspective. So, Coinbase recently set up an offshore entity in Bermuda and began selling perpetual swaps to overseas traders. What does that uptake look like? And do you expect that Deribit's business will just get rolled into that offering?
Yeah, I mean, first of all, when I tracked the number, their first quarter international business was like gigantic. It was like very strong in the first quarter. I think relatively speaking, I think they did internationally. It's even much better than what they did in the US, maybe at least in March volume. From a structure standpoint, I'm not sure whether how they would roll. Like, would they roll the Deribit to Bermuda, or they would roll Bermuda to the Deribit? I'm not quite sure. This could be a question for them, but I'm not too concerned about the structure. To me, the number one thing is, don't mess it up, integrate smoothly, and preserve the right people, attract the talent to Coinbase, and I think they will do fine.
So, Coinbase also will report earnings later today. What questions would you want to ask them?
Yeah, there are multiple questions in my mind depending on when I can ask questions. But I felt like a number of questions come up. It's obviously the financials for Deribit, right? So now we know Deribit, I think, generate positive adjusted EBITDA, but are these deals, is these deals accretive or dilutive to Coinbase in the near term? So we need to know the exact numbers and how much that would impact Coinbase trading volume and also the bottom line, most importantly. And number two, just like what you said, is there any synergy, like cost synergy that Coinbase can take out to make this deal more attractive? So that's another thing going on. And then, there are lots of like rumors, or maybe they even confirmed that they are getting the banking, I think, federal banking license, right? So that's an interesting angle. Now they are buying Deribit. They want to become a bank in the US. What do they want to be, right, in the future? So I sometimes I get this question, what is the end game for Coinbase longer term? So I felt like those are legit questions for Brian tonight.
And well, when you think of that question, is there a path that you feel like would make the most sense for them?
I felt like, I don't know for sure, but my sense is they want to be, they want to be a super app, just like the WeChat in China. They may want to be the WeChat in crypto, like global crypto space. That's what I'm leaning towards, but I'm not sure. I'm not Brian Armstrong, so I would ask him these questions and see how he responds to that. But another, kind of question is, do they really want to get into the TradFi space? This is pretty important. If you look at other competitors like Kraken and Robinhood, they play both in TradFi, like trade equities and bonds and commodities, and also crypto. But in the past, I felt like Coinbase really want to focus on crypto space. After this deal, I mean, Deribit is still crypto, but they want to get a banking license. I don't know whether they really want to be like, the Amazon or JP Morgan, or really like the WeChat in the crypto space. So I felt like, that could be an interesting conversation tonight.
And then when you look at their activities in DeFi, how, they have Base,
Yeah.
How do you kind of square this activity with that?
Yeah, exactly. This is like the question for many people. They have Base, they should be, or they could be a technology provider. Maybe like 3 years ago, 4 years ago, that's what I thought they are leaning towards into, right? Getting to becoming more like a technology provider. But this doesn't look like Base has gotten a lot of traction in terms of revenue contribution. I'm not saying number of users. I think they got a very great base of users. I think they try to get the transaction faster and cheaper. I think they achieve on that. But in terms of revenue contribution, it's still not pretty material. So to me, that's why I felt like longer term, they could become they may want to become the WeChat in the crypto space.
Yeah. The way that I view the base activity is more like they are setting up an offering now so that way they don't get disrupted in the future. It's like they feel like they could probably see where that trend will go over, X number of years. So that's my read on that. So, as we mentioned, this is the biggest M&A deal in crypto history, and it comes on the back of a number of other recent $1 billion plus acquisitions in crypto. So in late March, Kraken agreed to acquire NinjaTrader, a US retail futures trading platform, for $1.5 billion. In April, Ripple announced plans to acquire credit network Hidden Road for $1.25 billion. So why do you feel like all this M&A activity in crypto is so frothy right now?
Yeah, I think the number one reason is people start to realize that there's a day and night shift in terms of the regulatory clarity or regulatory framework after Trump got elected, right? He's the most pro crypto president, and then most pro crypto administration, and even look at the SEC regulators, they are pretty pro crypto, and also Congress. So you can feel like almost everybody in that world in DC are pro crypto. And that kind of like it becomes a key catalyst for even TradFi companies to feel comfortable to get into this space or being bought by a crypto company, right? So they kind of the reputation risk is lower right now, and they also see the potential in crypto, such as like the tokenization, how to use blockchain to make the transaction faster and cheaper. I do think many people see the benefit, but they were scared by the last administration. They didn't want to get into this space, and once they get in, they are being sued. They don't want to put themselves into that situation. So there are lots of pent-up demand. Once they see that there's a path for regulatory clarity, then the activities happen. So I felt like regulatory clarity is a key driver for that activities.
And has the SEC or any other regulator discussed this particular market, the crypto derivatives market?
The derivative market should fall under CFTC, not the SEC. I'm just looking at. I mean, now we don't have it. Now we don't have rules, right? Just make it clear. There's no laws and there's no kind of like
Crime
rules,
scene.
right, for the crypto space. In the traditional market, equities fall under SEC, but for derivatives, it falls under CFTC. That's why we need regulation. So that's why we need the bill. We need the market structure bill, right? That's what we are waiting for.
All right. Well, last question for you. Now that you're, seeing this news and, in the context of everything else that we discussed, what do you see as the biggest opportunities and risks for investors when it comes to, derivatives or really any of these changes that we've discussed?
If you look at from an institutional investor standpoint, I do feel like more and more there could be more and more crypto companies going public. So what that means is it offers a lot more opportunities and choices for investors to get into this space and get exposure in crypto, right? So right now you can put money into Coinbase, you can put money into the miners, you may be able to put money into the spot Bitcoin ETF, right? So those are the instruments. But I felt like once we get more clarity and after these deals, more private companies would go public for in the crypto space, that offers investors more choice to get exposure in the blockchain space. So I think that's one key development for me. In terms of the risk, again, like TradFi companies coming into this space, competition increases. What does that mean to the kind of like the other smaller players? I don't know. But the reality is, it will just create a lot more pressure. It will make the environment a little bit more, competitive to operate. So that could present some risk to some of the companies going forward.
All right, Owen. Well, it has been a fantastic conversation. Thank you so much for joining us on this Unchained live stream.
Thank you very much. Thank you for having me.
And thanks to the audience. Hope you all have a great day.